So Norma, are you with the AmeriCorps program, or are you up? Well, are you staff, or are you an AmeriCorps?
Oh, I'm an alum, but I'm one of the consultants that work
Okay.
with the AmeriCorps Delaware program.
Okay.
Yeah, I remember you from some years ago where you came to a AmeriCorps conference and you talked to us about financial literacy and a lot of great tools that you shared with us about credit unions and things during that time.
Yes. Yep. So I see Angela, Aisha. Good morning, ladies.
Good morning.
Good morning.
And I want to see if I can.
Good morning.
Good. I can share my screen. It's wonderful. Okay. Okay, good morning, everyone. My name is Rashmi Rangan. I am with the Delaware Community Reinvestment Action Council. I am so honored that we have a tiny little one as well learning about money. Good morning. Oh, that is awesome. I have been with DCREC for 25 years as its executive director. So over the last 2.5 decades, I've seen it all. Money is my passion, of course. The very first program that I started was teaching about money. Today, this organization has a credit union, Stepping Stones Community Federal Credit Union. It is the only minority-owned and operated institution in the state of Delaware. So if you are interested in supporting minority-owned financial institutions or businesses, please consider supporting and becoming a member of Stepping Stones. You can go online, Google it, find it, research it. In fact, one of my big mantras is don't trust anyone, yet make sure you talk to people, get their feedback, get their insights, and go and do your own research. So I'm telling you about Stepping Stones. I am member number 1. We made PPP loans. So if there are businesses you know that are struggling, they should reach out to Stepping Stones. By the way, not every Delawarean can become a member. You have to have a strong connection with the city of Wilmington, live, work, worship, or study in the city in order to take advantage of this fine institution. We also offer a couple of legal services through our nonprofit law firm. And one legal service is absolutely free to anyone in the state of Delaware. And that is, if you have any troubles with Uncle Sam, all you have to do is contact our organization and you really have a free tax attorney. We do not prepare taxes, but we do represent you as your lawyer all the way in tax court, or we have even gone to district court. There are 3 other legal services that we provide, and they are sliding scale fee basis. So our services are for those who cannot meet the free legal aid services that are offered in our community through legal services, legal aid, DVLS, etc. But then you can't afford the market rate attorneys. So based on family size, income, there is a fee structure, very affordable. The highest is $250. What do we offer? Probate, wills, powers of attorney, healthcare directives, any issue with the title to your home, mobile home, or if you want to have documents reviewed before you put your Jack Robinson on it. So those are essential legal services, we believe, that impact your pocketbooks, and we are here for you. And of course, last but not least is the Money School. Many of you may know about the Money School. It used to be run by a fine institution, Delaware Financial Literacy Institute. Ronnie Cohen retired, and all of its programs then went to different nonprofits. We acquired the Money School. Money School has faced a lot of challenges since COVID-19. As you probably know with your own experiences, these are incredibly difficult and challenging times for all of us. So technology has been a nightmare, if you will. I'm really delighted to be able to talk to you about money. Topics we will explore primarily are budget and wealth building, but you can't go from budgeting to wealth building without an understanding of credit reports and credit scores. So that is my plan. Given we are a small, cozy group, please, anytime you have a question, just ask. I think all you'll have to do is unmute yourself and ask that question. I don't want a question that ends up being unanswered, particularly in the small group. Okay, so how do I, yeah, there it is. So it's personal finance. It's all about budgeting. We will talk about how to budget, increase income, reduce debt, negotiate, manage cash flow, and create a budget. So how to budget is easy. Gather all income statements to find out how much you bring home and how often. Then you also want to see what is taken out of your paycheck or any other income sources. And the reason you want to see that is if too much is being taken out, which is why you're causing yourself a cash flow hardship, you can make some changes. And a great example is the earned income tax credit. If you've received it, then you can actually get an advanced earned income tax credit instead of waiting for Uncle Sam to save for you. And while you're waiting for that check or litigation, because somebody else went and got it and your refund froze and you are at risk of eviction. That's what we've seen so many times, that in February they filed for their tax returns to get their earned income tax credit, and February end, they are kicked out of their rental. Gather all your expenses, and they are all over the place. Bank statements, if you have a prepaid card or debit card, by the way, they are very, very expensive. Consider being banked. Credit card statements, the bills that you get, the checks that you write. So those are the ATM withdrawals that you make. You really have to gather everything so you know what are your expenses. And why do you need to do all this? You really want more money at the end of the month. How do you increase your income? Well, get a second job, find a better paying job. These are not the times where you can explore those options, but those options are there. It's not to say that you have to increase income. You can even manage by reducing expenses. You might consider starting a business, gig work. Again, Uber, Lyft, DoorDash, etc., are available options. There certainly are tax consequences. Sell an item or two or three, eBay, yard sale. I think if COVID-19 has taught me one thing, it is we have too much stuff that we don't get the time to really appreciate and enjoy. Now would be a perfect time to downsize and convert your trash into cash. Like I said, review your paycheck, consider changing your withholding, obtaining advanced earned income credit. For seniors, property tax credits are a good way to reduce their outflow of money. Look at Social Security, disability, SSI, veterans benefits. Do not leave any money on the table. Public assistance, Medicare, Medicaid, food stamps. There is a good website I came across, helpngen.com, that's English, and benefitscheckup.org. Nice sites that you can actually look to see if you can take advantage of benefits. How to reduce, hard look at every expense. And I really can't emphasize the word every. I think those of you who have heard me know that I don't buy anything new. I buy everything used. And by the way, I am a millionaire. So I can afford to just whip out my credit card and buy whatever I want. But I do not buy any clothes, shoes, anything new. Can you reduce that expense? Yes, there's a question, Tiffany. Oh, no, you're saying, all right, hallelujah, I agree. Can you reduce that expense? Every expense can be reduced, every expense. You might say, how can I reduce my mortgage expense? Well, yes, if the rates are low, refinancing it is going to reduce that expense. The big problem when we do reduce that expense is, oh boy, we think we are rich and we go and spend it all. I told my sister just recently to refinance and the money that she will save to sock away in saving and investing. Guess what? Portion of it she is saving, but a portion of it is going to purchase life insurance, which I'm not against. It is not money that is just going to waste by replacing a car that gets you perfectly from place A to place B to go and buy yourself a brand new car. For what? Go ahead and pay less. Be cheap and be proud. But make sure that you save what you save. And that is the trick. Save what you save. You can go grocery shopping and say, oh, cool, I spent only $25. My bill was $35, but I used $10 worth of coupons. Show me that $10 that you saved. Convert that saving into real saving. Negotiate. You must negotiate everything. This is America. Cash talks. If you are in a position to negotiate, get yourself a better deal. Communicate. I've always believed ask and you may receive. Show up. If there is a court date, show up. Even if you don't have an attorney, show up and say, here, Your Honor, is where I am. Otherwise, there will be a default judgment. You pick up the phone, you speak to somebody who's nasty and mean. Be nice, hang up, Close your eyes, say a little prayer, be grateful for everything in your life, and then maybe a couple of hours later, call. You might get lucky and talk to someone who understands and gets it. So I'll go back to the communicate and show up again. And this is, as a credit union, we are a bank. That means we make loans. And when we make loans, some of our borrowers run into hard times. When they run into hard times, all they need to do is pick up the phone, write a letter, document saying, I am experiencing a tremendous hardship. Please work with me. My regular payments are $200. I have looked at my budget. By the way, here is my budget, and I can only save $78 each month. Can you work with me with that $78 for the next few months until my situation changes? Those that have communicated are in good standing, and we have worked, because COVID-19 caused immense hardship. We have also had to take folk to court. And I don't like the fact that we get default judgments. You know, if you've borrowed money from the credit union and you're hauled into court, that's your last opportunity to tell us and the judge that you are having a problem. Because otherwise, when we have a judgment, then one day we'll find you and we will do a wage attachment. And that's going to drag your credit even more. All right. Get the facts, your own budget, your due dates for paycheck and expenses, and their policy. So if you are fighting with the credit union, you've signed some documents, you have a copy of that, make sure you understand that. Make sure you do your own budget. Make sure everything. I used to initially do a budget on calendar. So on the calendar, there used to be a plus sign for the income that will come in on the date that will come in, and a minus sign of all the bills along the way that I would be paying. And every Saturday morning, I would look to see, do I have to make any adjustments because I'm left with only $3.78, and the next paycheck will come on Monday, but between Saturday and Sunday, I have something, some expense. How am I going to adjust for that? And in the end, always know that honey attracts more flies than a fly swatter. So when you're negotiating, not from a position of strength, but a position of asking, begging for forgiveness, be nice. How to manage your cash flow. This is, I believe, most people's greatest pain point is that there are many days when the income and the bill are mismatched. And that the one primary reason is most bills are paid on a monthly basis, but most paychecks come in either weekly, bi-weekly, bi-monthly. Very few are paid monthly. And therefore, unless every week's budget takes into account those bills that will be due each month, you are going to have those imbalances. So I mentioned about the calendar. That is a very good way to manage it. Excel spreadsheets, you can find free templates, or just create an income, expense, and calculation at the end that shows balance. You can download an app, make sure you get a free app. But in all of those apps that you download, you will have to manually sometimes do entries. You have to be honest with those. You do have the option of negotiating a new due date with most of your bills. So, car payment, for example, after you've run entire year's calendar, you can see maybe car payment, instead of paying it on the 18th, if I paid it on the 13th, then I will always be able to pay. You can pick up the phone and negotiate with them and say, change my due date from the 18th through to the 13th. Why? So that all bills are paid on time and you have the money when the bills are due. This is the only reason why cash flow becomes so important. How to budget? Very simple. There is income, which is plus, and there are expenses, which is minus, and your goal is income minus expense is a plus. You have money at the end of the month. There are many ways to do your budget, many ways to categorize. You'll have to figure out your ideal place. Again, if you Google, you'll find numerous solutions. Initially, you'll have to really micromanage to make sure you create right categories. When you get a handle on it, you will broaden those categories. And then there will come a time when you will basically let it automate and you will only look at your money to be grateful that you have and to think of what great good can you do with the money you have. In summary, Jasmine says, money is like a 2-year-old. I want, I want, I want. Budget is like a responsible mom. No, you cannot have that yet. Not until you ABC. Budget puts you in control. So it's very important. Budget is not a dirty word. Here is my information, email, phone number, cell phone, etc., etc. But I will come back to every section ends with that contact information, but you will receive uh, these this PowerPoint presentation. So any questions? Let me see. I didn't see any. All right. So I'll move on to credit reports. I started with credit reports first and credit scores later because before you look at your credit score, it is incredibly important you look at your credit report. So I'm going to quickly go over how to order your report, how is the report organized, what to look for, how to get errors corrected, what the do's are, and what the don'ts are. How to order your report. By law, you have the right to one free credit report from each bureau once a year. So that is annualcreditreport.com. But we shouldn't end over there. There is choicetrust.com that also collects data on us, and those that is used in insurance cases or background checks for employment. Then you need your medical condition report as well. Again, you have a right to that one free each year. If you are a tenant, you want to look at your landlord-tenant history to see what is being reported. Personal reports on LexisNexis, check system. So there is so much that you really, okay, go back, or am I going forward? Back, back. Okay. So these are many, many places that your information resides, and you need to be able to check everything. And now, in some ways, they say that you have more time. I don't know about that. But if you think you have more time, you may want to organize your life around picking maybe 15 minutes every day or an hour every week to just focus on money, your money. How is your credit report organized? The first piece is your identity: name, address, social security, date of birth, etc., etc. Then public records, if there is bankruptcy, if there are judgments, if there is a tax lien, those will be next. Then the worst trade lines are reported in the first few pages, and then the good trade lines towards the end. Inquiries: who has looked at your credit reports recently? And the last section will tell you, write on your credit report how to dispute information that resides in your credit report. What to look for in your credit report? Credit reports are riddled with mistakes. Your mom's name might be the same as your name, but you two live in two different states. Your social security numbers are different, yet your mom's information might end up on yours. Even if it is good information, you do want your credit report to be accurate. So you want to make sure that that information is removed from you. So check for names, addresses, date of birth, marital status. If there is an ex-spouse, that information ought not to be on yours, etc. Then the lawsuits, judgments, bankruptcies. You want to focus on the dates that they were filed, dismissed, or discharged, and whether they were against you or somebody else. Was it somebody in your own family, or some total stranger's information is showing up on you? And with bankruptcies, you also want to look at things like Macy's account was discharged in bankruptcy. So it should show 0 owed, but it shows 900 owed. That is incorrect. You want to get that corrected. So you want to make sure you know the current balance on each account, especially those that were just discharged in bankruptcies. You want to look at your payment histories. If it's reporting that your mortgage is consistently late, but you've been consistently paying every month, you want to contact the credit bureau to say that they are reporting it incorrectly. And you want to contact your mortgage company and say, what in the world are you doing? You're ruining my credit. You must also know what the credit limits are on each trade line, because it is incredibly important for you to know how much is available to you so that you can manage what to do with the credit that is available to you. How to correct your errors, their errors. Really, everything is online these days. So you must, to the credit bureaus, inform them that they are reporting incorrectly. You need to document as much as you can about their incorrect errors. You need to tell the provider, the one who's reporting that incorrect information. In fact, at the same time that you're disputing with credit bureau, dispute with your lender, and same information, send it to both of them and say, fix this because it is hurting. You should have supporting documents, but never, ever, ever part with originals. Never pay anyone to dispute information for you This is something you can do it yourself. If there are serious, egregious mistakes on your credit bureau, excuse me, and even after you've tried, they are refusing to fix, at that stage, you may need legal help. Shop around and be very, very smart that you get a good consumer advocate to represent you should you have to take on the big three credit bureaus. What you need to do. Once you've looked at your credit report, you will intuitively know that you have to do a whole lot better. You have to build your credit. How will you know? The very first or second page. Bankruptcy, judgment, lien, collection. I have to build my credit. So there are credit builder loans. The reason I like credit builder loans is because there is some coaching attached to it. Credit Union, Stepping Stones Credit Union has one, and Artisans Bank offers one. Both of them have requirements of coaching. Artisans has a requirement of somebody else who is working with you actually formally submitting your loan application to Artisans. You can't walk in there and ask for a credit builder loan. Secured credit, many credit card companies offer secured credit cards, and that is a good way to build credit. You have to review your credit report. If the score is low because of errors, dispute and have them corrected. You must monitor constantly. Your bank, if you have a banking app, you are able to sign up for alerts. When your loan payment is due, when the balance is low, etc., etc. Even with your credit cards, you have options to sign up for alerts. So sign up for alerts. One of my credit cards that I have, or one of my bank accounts, offers free credit monitoring. And I was incredibly surprised when I looked at what they were monitoring. And they actually had a report for me recently that somebody hacked into my email. So I had to go and double check and fix that. So these monitoring services, free, are really beneficial. Don't do this. Don't ever close an unused credit card account. And when we talk about credit scores, this will become very relevant. The reason is if you had a credit card when you were 18 and you've been using it and paying it, it's building credit history. And now you have no need for it. If you close it, you have effectively erased your length of credit history. Don't borrow or open new cards unless you need to. Don't ever, ever pay anyone to improve your scores or credit report. You can and you should do this. If you do this, you will learn the importance of credit, good credit, because one tiny mistake takes forever to fix. And it's a great learning moment. All right. This I didn't update. It's a copy of what was on my credit scores worksheet. But in summary, credit reports are readily, easily available. They, by right, you have a right to your free credit report. And it isn't just one credit report, but I showed you there are many. You might show up in a check system, on LexisNexis, in Choice Trust, so many places. Since everybody knows it seemed like everybody knows you better than you do yourself. So you need to get to know yourself. Again, my contact information. And I'll switch now to credit scores. Let me take a short breather to see. I don't see any chat questions. Have I? No chats either. Nobody has any questions? Okay. In any case, I wanted to go over this real fast, but let's see, how am I doing? Not too good. All right, how to see your score, what makes up your score, pay on time, use 30% of available credit, the do's and don'ts. Your credit score goal ought to be to get it over 700. Credit Karma is a great site. I use it all the time. Credit Sesame is another great site. There are 101 places. Discover, you don't have to be their customer to see your credit score. Likewise, Capital One, credit-wise. And when I talked about the Capital, about the monitoring, it was credit-wise that I had signed up for that told me that my email was used. Wallet Hub, Mint, Bankrate, NerdWallet, etc. Lots of places to get your free credit score. What makes up your score? Every bill paying on time is 35% of your score. Credit usage is 30% of your score. So if you have $1,000 available to you and you use up $1,000, you will get 0%. But if you have $1,000 available and you use only 30% of it that is available, you get 30% points. Length of credit is 15%, inquiries is 10%, and the type of credit that you have, the diversity of credit makes up the remaining 10%. Pay all your bills on time. Automate. Automate, I am a big fan of automation. Save 1 month of expenses. This allows you to automate, set it and forget it. Use debt wisely. Charge only that which you can pay it off in full, and at least, if not in full, at least within 3 months. Pay on time, every single bill. And if you can't pay your credit card bills in full on time, at least pay the minimum. 35% of your score depends on, do you pay your bills on time? And you might think, all right, well, Verizon doesn't report to the credit bureau. My cell phone doesn't report to the credit bureau. DPL doesn't. It doesn't matter. Get in the habit of paying all bills on time, because when you don't is when they will report. So it's a good place for you to be. Set it and forget it. And the only way you can do that is if you've saved 1 month of expenses and it is in your operating account from which all your bills are paid. Use only 30% of available credit. Call your lender to find out what your credit limit is. Now, if you look at your credit report and you find that you've charged $300 on a credit card, but the credit limit on that card is only $500. Your options are to pay it down to 200 and something, 150, or you could call the credit card company and say, raise my credit limit from 500 to 1,000. And if you do that, if you raise your credit limit, then you don't have to do anything, because now suddenly $300 of 1,000 is 30%. And just by doing that, your score has gone up. Over time, you must maintain a 30% credit utilization. Not to say that it will always be that way, which is why I recommend having a score of greater than 700, because when your score is great, then those little blips don't damage significantly. So for example, say I have $1,000 credit limit and I need to buy something, a lawnmower. I want to buy a riding lawnmower and it's $900. So today, if I charge $900 to that lawnmower with my credit score of way over 700, it's not going to ding my credit score so much. But I will next month hopefully be able to pay it off completely. If not completely, in 3 months, I will have paid it off. And 3 months later, my credit score will be back where it was. Do your credit builder loans, secured credit cards, review your credit report, and monitor. So that is true for credit scores. That's the only to boost your credit score. Same thing, don't close an unused credit card account, don't borrow, open new cards unless you need to, and do not pay anyone to improve your credit scores. Credit scores are complex, but really there's only two things that you have to do. One is pay all your bills on time and make sure you don't charge more than 30%. Everything else happens and you don't have to worry about. You can sign up for an app and set up for alerts. So that was credit score. And now it is wealth building. I will talk, and here I do, since that was the most important topic of interest for you, since I've snuck in there that I am a millionaire, don't hesitate to ask me how I got there. I started with nothing, and it took me 30 years to get there. Let me start with what is wealth. Wealth really is assets minus liabilities. A home, the day that I borrow money to buy a home, it is not wealth yet. I have borrowed $200,000 and my home is worth $200,000. My wealth is zero. 10 years I pay on this mortgage. My house is still worth $200,000, but after 10 years of paying, I owe my lender $150,000. I am wealthy by $50,000. So that is wealth. According to Charles Schwab, I am not wealthy. When I get to $2.4 million, I will call myself wealthy. I'm rich right now. Just 400 extremely wealthy individuals have as much wealth as 16 million African American households and 5 million Latino households. 400 extremely wealthy individuals. So what's so special about them? Warren Buffett's house is worth 0.001% of his total wealth. And we say, guys, when you're thinking about home ownership, your housing expense cannot be more than 30%. Wealthy did not get wealthy by spending. That is a critical lesson to get out of what is wealth. So remember, assets minus liabilities. Debt is liability. So what are some characteristics of debt-free people? They are goal-driven. Those of you who have heard me before have heard me say about 20 years ago, I started saying, on my 60th birthday, I will be a millionaire. And then I kept saying. At first, I lied to get attention so people would listen to me. And the more I lied, the more I said, the more I started believing. And when I started believing, I started working toward that goal. So even if right now that goal might seem ridiculous, that I will be a millionaire on my 40th birthday, might seem ridiculous. Keep saying it until you believe it. Because the day you believe it, all your actions will start connecting with that goal. Debt-free people are also shrewd, and they are shrewd about money matters. They understand uh, the rate environment. They understand the uh, utilitarian value of money. They understand a dollar invested is always better than a dollar spent. So they're shrewd. Like I said, I could have bought myself a more expensive car, certainly a car that had automatic locks, but my car is a brand new car, but it not now, it's several years old, but it gets me from place A to place B. It is a royal pain because I have to lock all doors. I have to roll down all windows manually, but it's great. It's great. Who do I have to impress? I don't have to impress anyone. All I have to do is take care of me. That's it. Besides, I mean, people that I'm going to try and impress with all my money ain't gonna do nothing for me if I am ever in need. So remember that you have to be shrewd. You have to be really snarky about money. Disciplined. I can't say enough about discipline. When your debt-free people are so disciplined that they see that shiny object, they can look in their bank balance. They can say, yep, I can acquire, but let me sleep on it. And the next day, that shiny object ain't as shiny anymore. Or Google, and then you say, like today, it wasn't even my money. This particular laptop has been driving me nuts with all Zoom calls. So I spent a lot of time figuring out why is it that my microphone isn't working. And I went into all the settings, I closed everything, and today it's working fine. So I've saved DCREC some money. I've been researching about laptops, and I don't now have to spend. Not materialistic. There it is. I'd love a new laptop, but I'd love to buy new clothes. I mean, right now in the last 3 months, we haven't had to go anywhere. Patient. Obviously, money, like everything, takes time to grow. I have not looked at my investment portfolio since I started investing. Why? Because I don't want it for now. I want it for later. I want it to leave behind. That is my legacy. So let it grow patiently, responsible. Debt-free people are very responsible. They are very confident that they will get there. What have I done again? Okay. That there's probably one more. 1, 2, 3, 4, 5, 6. Yeah. Okay. These are some of the characteristics that are for debt-free people. And by the way, I am totally debt-free. I'm lying. I do have a student loan that will go away soon. I have the option to pay it off, but at 2%, I'm not too interested in paying it off. How we build wealth. Inherited. Well, I wasn't that lucky. My mom and dad are still around, but they are not wealthy enough to leave me money. But if there is a will, there is a way. I could ask my mom and dad to purchase a big life insurance and pay their premium so that when they pass on, I can inherit some wealth. So think about it. We sometimes think, oh gosh, no, I can't inherit it. In fact, I believed for the longest time that I won't inherit anything, but I'm wrong. There is a possibility. Of course, we have to build wealth. And that is true for most of us. Home ownership, investments, business, etc. I can only speak about home ownership. Investments, I started and I left it to my investment manager to inform, educate me, and allow me to make decisions. But by and large, I know nothing about investments, except that I must invest regularly. Home ownership. That's how most of us build our wealth in America, which is why the example with asset liability, I started with home. If you are considering building wealth, you're not a homeowner yet, you may want to consider home ownership. Even right now, in this pandemic, is a good time to think about home ownership. And don't listen to anyone who says, oh, home ownership isn't for you. I start with the belief home ownership is for everyone. Of course, there are a whole bunch of things that you have to do to make sure that you can achieve that dream. But that dream should not be just for select few amongst us. Here was something, grant of the millennial money. I was intrigued by what he said. He broke down all his money goals into daily goals. And he had a goal of investing every single day, whether it was $1 or $500 or 5,000. He set a goal of investing every single day. And there are gazillion apps out there that you can explore too. If you decide that you're going to invest, figure out and set a goal. That's one way. Bach writes in The Automatic Millionaire, when you earn $1, the first person you pay is you. And previously, whenever I've talked about money management and I've done a budget, I've always said, pay yourself first, pay yourself first. And that is paying yourself for your future. Then you do all the other bills or expenses. And most of us start our budget with our bills. This is all we have to pay. So as long as my budget makes that, I'm good. But you're not taking care of yourself. Home ownership. And I truly believe that I've always believed, and here is the stat to prove it. Median net worth of homeowners is 80 times larger than renters. And there is a simple reason. When you are renting, you are paying for the roof over your head. When you are owning and you are paying the mortgage, you are paying for the roof over your head that you will own one day. So it's forcing savings. If you're thinking of home ownership, contact a HUD certified housing counselor. Here are some rules of thumbs. They're the rules of thumb, and I've not changed it for the last 30 years. Borrow no more than 2.5 times your annual income. So if your income right now is $30,000 a year, $75,000 is the max that you should borrow. And you say, what can I get for $75,000? Well, it might be a studio condo. You may not get a 4-bedroom garage, but you will get your own studio apartment, which 4 years later, your income triples. You now earn 90,000. You can, at that time, look for your dream home, and the studio apartment that you own, you can rent. So just because you're making less today doesn't mean you should settle for rental only. You can settle for a tiny little piece. Always put 5% of the sale price down as a down payment. So when you start out, you have 5% equity in it. So you aren't starting out with zero, asset less liability. Ideally, you rates, today I'm saying because of the rate environment, and I've always said, 30-year fixed rate mortgage is what you want to go for. If you want to get debt free earlier, you can start paying more money every month towards principal. Or if the rate environment changes and interest rates go down, then you can refinance. Your mortgage payment should be equal to or lower than your rent payment. So that is a consideration you need to make. And the difference, suppose you're paying $800 on rent right now, and you bought this $80,000 condo, and your mortgage payment, principal, interest, taxes, insurance, and condo will probably be under $600. So if you're saving that $200, you need to immediately earmark that saving for investing. As we are building wealth, we have to make sure we protect wealth. So homeowners, renters, life insurance, just a note over there, investments are not insured. When you're investing in the stock market, bond market, stocks go down, market crashes, you lose it all. The other way to protect wealth is scams. If it is too good to be true, it is too good to be true. If a good